Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormiz Patakia and Reema Tendulkar. Well, it's the start of a new series, a new month, and we are getting a lot of data, whether it concerns with tariffs delayed by 7 days. We do have the auto sales numbers which are coming in. This is the month where we'll get RBI rate decision as well. And earnings, they are trickling in thick and fast. So we do have a lot of conversations lined up on the show. For now, Nifty flat with some negative bias, and it has continued to be quite volatile since morning as well.
But largely resilient, right?
Yeah.
I mean, we've not given up too much. In fact, just swinging between the red and the green line right now as we speak. But let's begin the show then with the auto sales numbers. Mahindra & Mahindra, the company saw the total sales surge by 26% versus last year. The passenger vehicle sales saw a jump of 20%. Total exports were up 83%. Nalin Kant, who is the CEO of the automotive division at M&M, is now with us on the show. Thank you very much for joining in. So we've got the numbers for the month of July, but can you give us an indication of how August and September is likely to be? What is your own internal expectation for SUVs? Go ahead.
Thank you, Reema, for having me on the show. So hard to predict. We are heading into the festive season. We are optimistic about having a strong festive season as well. But we are staying true to what we said we will do, which is mid to high teens growth in the SUV for the year. And that's what we've been delivering so far. As you said, July has been 20% growth. So we expect similar mid to high teens growth going into the festive season as well.
Okay, so, your tractor sales have come in 6% higher, but the estimates that the street had was of around 16% growth for tractor business. Can you give us a sense of what the outlook is here? What has the demand been in July and coming ahead as well? We do have festive season. We do have rains which have been decent so far. Yeah,
again, tractors is something I wouldn't be able to comment on. It's a different part of the business. But in general, the monsoon has been doing well. We have 7% higher in terms of rains. So far, we have seen strong traction in general on the rural side of things. So I think that will hold us in good stead overall.
What about the SUV demand on ground? Because there has been, the SUV sales have been fairly robust, but there has been concerns with regards to the imports of rare earth magnets from China. And a lot of companies have also raised concerns with regards to that. What is your own situation right now at M&M with regards to the rare earth magnets? Has there been any disruption that you have faced because of this issue?
Yeah, almost. Thank you for that. It's a critical focus area for us over the past few weeks now. And we've taken a multi-pronged approach, looking at diversifying our supplier base, looking at different materials we can de-risk with. But overall, at this point in time, we haven't had any impact. And going into the festive, both Q2 and Q3 we are well covered from a rare earth perspective. So we have no concerns there at all. There's a couple of components we are tracking at this point in time from a Q4 perspective, but we are confident those areas will be de-risked as well. But so far, nothing to be alarmed about.
Nalini, so why are you still guiding for a mid to high teens kind of an SUV growth? In July itself, it was a 20% growth, so you've beaten that. Plus, as you said, you're entering into the festive season with a lot of optimism. So at least in the festive season, could you give us an indication of what growth for SUVs could look like? What is your own internal assessment?
Yeah, like I said, it's hard to see how it is going to play out. We'll have to see, as you know, that these numbers are coming in the backdrop of an industry which is flat to degrowing a little bit. And so we want to be a little bit realistic to ensure that we are putting numbers that we are able to totally be convinced about. So at this point, that looks like mid to high teens growth. Like you said, YTD, we have done about 22% growth. And we are optimistic based on the portfolio that we have, that we'll have a strong festive season coming in. But best to stay with the estimate we put out, which is mid to high teens growth.
Okay, mid to high teens growth. Exports are up 83% in the auto segment at 2,774 units. Is of course a smaller unit versus the others. Just wanted your take on export markets because a lot is happening globally, be it tariffs, be it sanctions coming in. How does it impact you overall? What is the export growth that you're looking at?
Yeah, exports, like you said, is a relatively smaller number for us, and our focus areas have been primarily on South Africa and Australia so far, and We started with Scorpio and the 700 there, and we've had some good traction. Recently, we launched the 3XO in South Africa a couple of quarters ago, where we won the Car of the Year. And then we just launched in Australia a few weeks back, and we've gotten really good feedback, both from early customers and press as well. So clearly an area we'll focus on, but we want to make sure when we go out there, it's with a set of products which will do well, and we have a strong right to win. Our EVs give us that right in the EV space as well. So that's something we'll be taking into these markets. UK is on the horizon in the next 18 to 24 months as we take our EVs there as well. So we will do in a measured way and with products which we believe can do very well in these markets.
So would it be fair to say that the focus of the subsequent product launches will be more towards EVs than compared to the ICEs?
No, so we've put out a plan in terms of launches over the next 3 to 5 years. It'll be equally balanced for us. So for us, both are critical parts of our portfolio, and we'll have launches lined up in both. In fact, on August 15th, we're going to be talking about our platform, which will be helping us underpin the entire launch program for us going into the next few years. And it will be balanced between EV and ICE both.
All right, Nalindkant, thank you so much for sparing time and joining us. Wish you good luck for the rest of the year as well. Hope to have more often on this platform. The management of Mahindra & Mahindra's automotive division on the sales numbers for the month of July. Take a short break. From one automaker to another, the management of Maruti Suzuki joins us to discuss their first quarter numbers and the road ahead. On the other side, stay tuned.
Welcome back. Let's turn our attention now to commodity space. Manisha is now joining in and she's watching rice. Manisha, what's happening?
Oh, well, yes, because, there's a sell-off not just in the non-agro space, but in the agriculture commodities as well. And I'm looking at rice because the decline has been really sharp. If you look at the prices in the international markets, they're trading at a 2021 lows right now. In the last 1 year, we've seen 18% of a decline coming for the rice prices. In this year, 2025, we're down by 13%. In the last month, that is the month of July, also has been on the negative there. The global supplies have continued to outperform demand. India is returning to export markets with all the curbs taken away now, and that has created a situation of excess in the international markets, weighing onto the prices not just in India, but most of the origin countries and globally as well. So when you look at the global rice production for 2025-26, 538 million tons is what the street is working with, and that brings the total rice availability to around 743 million tons. Also, US, another major producer, is looking at rice stocks at around 5-year highs of around 47.5 million tons. That continues to weigh in as well. For the Indian markets as well, we are looking at a third straight year perhaps of a bumper or even a record rice crop right now. And when you look at the Indian stocks, they are up 15% year-on-year basis. So even as the government procurement or the government holding has to be just about 13.5 million tons, the stock that the Indian government has in sense of rice is a huge 55.6 million tons. And there's no reason or no way that you could be looking at rice prices increasing in this year in India or world.
Okay, so that's about rice prices. Lots happening in the commodity space as well. Let's go across to Hormuz. He's gone across to that big wall, going to tell us about the top movers in the market. Hormuz, tell us more.
Can't not talk about PNB Housing today because the top F&O loser continuing to extend losses. 16% down on that stock now is the biggest single-day drop that the stock has seen since March of 2021, and on very strong volumes as well. Almost 2 crore shares already traded compared to a 20-day average of just 3.7 lakh shares. So it's a big volume mover on the downside today is PNB Housing. Netweb Technologies came out with numbers yesterday, a result reaction. Almost 33.5 lakh shares have already been traded compared to a 20-day average of just 2 lakh. And from its IPO price of 500 rupees, the stock is up well over 4x now from those levels. Radico Khaitan is the other one. This is a 4th straight day of gains now for the stock, and more than 10 lakh shares now have been traded for 2 consecutive sessions. And even today, 13 lakh shares have already been traded. Yesterday was 11 lakh by the close of the session, and the 20-day average is just 70,000. And last name on the list is IIFL Finance. It was down yesterday. It's extending its losses today, 6.5% lower on the stock. It's down 4 out of the 5 days this week, and this is turning out to be the worst week since February of 2025 that the stock has had. 29 lakh shares traded already compared to a 20-day average of just 7.5 lakh. Back to you guys.
Thank you very much for that. By the way, Chalet Hotels has cooled off a bit. It opened straight away with gains of about 17-18%, but now it's up nearly 7%, again reacting to numbers. And as Mangalam was saying, it's boosted by the consolidation of the residential real estate business. So revenues are up 148% to 895 crore, but that includes 439 crore of the residential project income to the top line. And margins too have been proportionately bumped up. So the stock is still higher, going strong, but it's got a bit of, it just cooled off a tad bit from the opening level euphoria. PNB Housing Finance continues to slump. That's down nearly about 16-17%. IIFL is weak. Swiggy's lost nearly 2% as the overall losses have widened to nearly 1,200 crore. And quick commerce, that's driving a chunk of the losses, close to about 900 crores. So Swiggy is under pressure. And this performance is at a bit of a contrast to what Eternal did post their numbers. Netweb is a big mover on the back of their numbers. We'll get chatting with the management, but it's been a very strong performance. But let's talk about, Maruti Suzuki, very strong Q1 numbers. Expectations were muted. The company's profit, though, was aided by other income. Revenue growth was muted, but again, higher than expectations. Parikshit spoke to Rahul Bharti, who is the Senior Executive Director at Maruti Suzuki, and began by asking him about the drop in demand.
Retail domestic sales declined by 3.7% and industry as a whole declined by 1.3%. A large part of it is because of small cars. And, just to give you some statistics, in the financial year 17-18, we had 2.8 million small car sales with below 10 lakh rupees. Above 10 lakh rupees, we had 460,000 sales. Now that 2.8 million over 7 years has come down to about 2.3 million, which should have been a huge growth, but it is down 19% over 7 years. Cars priced above 1 million rupees rose from 4.6 lakh sales in that year to about 20.6 lakhs, which is a 4 times jump. It's a healthy growth and we are happy with it and we want to supply to that segment also. But we are concerned about that 28 lakhs, which was something like more than 80% of the segment that time, which is actually degrowing. So this is a cause of concern, and this is what is dragging down the overall sales of the industry to in the negative zone.
Could you give us a sense of how the raw material costs are putting pressure on margins? Any improvement in the situation?
Not really. It appears that the steel industry is taking undue benefit of the safeguard duty, which was not applicable for some grades, but there is some pressure from steel, which we think is not warranted. There are other commodities also. In Q1, copper and aluminium also showed some upward pressure. We hope that the commodities continue to be soft so that the customer is not impacted.
Right. When it comes to the rare earth magnet crisis, how badly is Maruti Suzuki getting impacted as a result? What are some of the alternatives that you're working around? And what's going to be the production impact in Q2?
So far we have been able to, insulate ourselves from any kind of impact. Of course, the effort is on. It's work in progress. We are making alternate efforts. Mostly these efforts are in the nature of not importing the rare earth magnet itself, but importing a larger aggregate or a sub-assembly from abroad, maybe China, maybe some other country. But it does come with some amount of costs associated. If and when we have any problem in our production, we'll of course come back to you and announce through the stock exchanges.
Right. Just to ask you about deliberations with regard to CAFE norms. There are deliberations going on in SIAM, and Maruti Suzuki also has a view, which we have been reading about, that CAFE norms need to be revised in favor of smaller cars, considering there is a lot of costing pressure on small cars at the moment. Could you give us a sense of where these stocks are and what is Maruti's rationale when it comes to revision of these CAFE norms, and why is it important for the industry right now?
Right. So the deliberations which are in SIAM, I think it's not appropriate for me to comment on that because SIAM is the best spokesperson. But since you asked the rationale, I can certainly explain. The CAFE follows a sloping line. It follows a differential methodology, which means lighter cars are given more stringent targets and bigger cars are given easier targets. Now, what happens is at very low weights or at, if you extrapolate the line backwards, which means at the lower weight zone of cars, it becomes technically impossible to achieve those low targets. And as a result, cars which have low absolute CO2 have to be either discontinued or have to be sacrificed to meet a regulation which counterintuitively was supposed to lower CO2. So we are sacrificing models of low CO2, low absolute CO2 to meet a regulation whose objective is to reduce CO2. So, and generally this anomaly is not a new thing. The whole world knows about it. And almost the entire world has some regulatory correction at the lower end of the curve. They have some kind of protection for small cars because it's a technical anomaly. And that is what we have mentioned. Fortunately, people understand this phenomena, and we hope that this would be addressed soon.
Okay, all right, that's the word coming in from Maruti Suzuki. With that, we'll slip into a break. When we return, we'll discuss market technicals with Mitesh Thakkar, also discuss the top trading bets.
Great.
Welcome back. 65 points lower on the index, still fighting to hold that 24,700 mark, but on course for a fifth consecutive weekly loss. PNB Housing is now down 16.5%. What has also extended its losses is Niva Bupa. That is also an earnings reaction, 6.5% lower on that stock as well. So most of these names having a negative reaction to their results. Nuvama Wealth is the first day of an FNO stock for Nuvama Wealth, and that stock too is down around 4%. But on the flip side, Suzlon, which is also its first day in the FNO segment, trading with gains of close to 5%. Mitesh is now joining in for a quick chart check. Mitesh, well, you're still holding on to that 24,700 zones. Do you believe that this 24,600 zone will remain a very strong support and we'll keep consolidating in this 500-600 point band? And your stock recommendations as well.
Yeah, good afternoon. So I think in the short term, yes, because most of the volatility indicators are flat, which means that while we are seeing bouts of bounces and declines, there is no follow through happening over there. So my sense is that, in the short term, I think we might not do much and do a broader range, which is to begin with around 25,250 on the upside, about 24,600, 550 on the downside.
What about stocks?
Yeah, I was coming to that, sorry. On the stock side, I have a sell on ONGC with a stop at about 240 for a target around 228 over there. And sorry, and on the buy side is HUL. It's come off from the day's high, but the structure is still good. And this current price offers you a good risk reward entry ratio. So keep a stop below 25.35 and look for a target of 26.10.
Okay, all right, Mitesh, thank you so much for joining us as always and have a great weekend ahead. With that, we'll slip into a break. As we do that, here's some good news for our viewers. India's business news leader is now click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. Let's get the latest trends from the futures and options space. Mangalam now joins in. Mangalam.
It's a relatively quiet start to the August series, and that's something that the bulls would like as well, because July series we lost nearly 800 points on the Nifty after 4 series of gains. So let's see what August has in store for us. The Nifty, the mid-caps as well as the Nifty Bank are, just sitting between red and green right now, marginally in the red for the frontline indices. The broader markets, however, lower by almost 0.5%. FMCG stocks, they are outperforming. So all the domestic consumption themes are likely to return as we move towards, one, better demand conditions ahead. Also, a lot more uncertainty in the global facing names. So as a result of which, the street is bidding these FMCG stocks higher. So you have HUL, Asian Paints, Britannia, ITC. And remember, August also is the start of the festive season for India when we have, Ganesh Chaturthi and all of that. So from here on to the second half of this year, typically 60-65% of the consumption of the country takes place post-August. So that's why these stocks are fairly well bid. But right now, the market expected by, all these option writers is likely to be in a range. The 24,700 put, these are options that expire next Thursday. 150 rupees in terms of premium, telling you that at lower levels, 24,550 thereabouts, there is support. But belief is that the market may not even go 24,550 because yesterday's low is fairly crucial. On the way up, however, there's not enough confidence to, for the market to go above that 25,000 mark, because the 24,800 call writers also equally active, and they're looking at a premium upwards of 80-90 rupees odd as well. So that tells you that at higher levels, there is some supply coming in, 100 rupees on 24,800 calls. So if you're looking for a broad range on the Nifty, 24,550 to 24,900 is what the option writers are betting for the next 3 or 4 trading sessions. I'm just looking at the August series, big triggers for August series, because in the past, August series has been known for moves, big moves on the upside as well. So you have global updates around tariffs, something we'll be watching out for, RBI policy outcome next week as well. And then you have remainder of the first quarter results, along with the festive season kicking off. So we'll keep an eye out on all these triggers for the month of August. For now, a quiet start, bulls would like that.
Oh, yes. And festive season, something that all of us will watch out for as well, right, Mangalam? Thank you so much for joining us with those cues from the F&O space. Let's talk about Netweb Technologies now. Saw strong revenue growth in Q1. Margins improved sequentially. AI workstation segments saw 300% growth on a YOY basis. Sanjay Lodha, who is the chairman and MD at the company, is joining us now. The stock is up 11.5% as we speak. Let's talk about the guidance going forward in that case. Mr. Lodha, good morning. Thank you so much for joining in. Strong growth in revenues, almost doubled on a YOY basis, and the AI segment did really well. What's your guidance for FY26 in terms of growth, and in terms of segments, which will be the segments that will drive the growth that you'll see in FY26?
Thank you. Thanks for your time. So basically, it has been a very, very robust quarter for us. As you know, basically from the very beginning, the company is somewhere around 25 years old. Our focus has been into the high-end computing area, actually. And we have been focusing on Make in India and developing and trying to do the hardware design, manufacturing, and even the software and the services, everything in India. So that is definitely, we have developed the all kind of skill sets over a period of time over the past few years. And that is actually helping us so as to basically help us grow and to keep our growth momentum on. The other thing which is very important for us is basically the focus, the niche focus which we have. The 3 areas we work upon. The first is the supercomputing, that is HPC, and that we have been doing for 20 plus years. So that is around 25%, that is around 35% of our business. Private cloud and HCI is another 35% of our business. The AI segment is a bit surprised this time, because AI segment used to be around 7% of our business 2 years back, but now it became around 15% of the business. In this quarter, we are seeing it around 29% of the business. But really speaking, the kind of, if you see, since we got listed, this is the 9th quarter result which I presented. we have shown a consistent growth of 40% CAGR plus actually across all the quarters without any fail actually. And I will remain to guide at the same level that basically we'll keep on growing at the same momentum. And because the business is highly predictable. As regards AI is concerned, definitely this quarter we had a very large deal. That's the reason you might be seeing a small kind of a spot there. But I personally would like to guide that 20% or 22% kind of a basically share in my total business for the AI segment. Because the other two segments are also very growth segments. They're also growing very well.
Got that. So AI revenue contribution of 29% in the current quarter was caused by a one-time spike, a large deal. But you expect AI contribution to settle around 22 to 23% for this year, correct?
Yeah, I used to guide it around 20%, but now I'd like to increase my guidance there to 22% on their total revenue, because my other segments are also equally growing. You see
Right.
the data center is growing, the private cloud market is growing, the HPC LSM 2.0 is already out. So basically that's all there. Thank you.
Yeah. So since you've increased the guidance on the AI contribution from 20 to 22%, why not on the margins? On EBITDA, you had guided for 13 to 14%. But this quarter, you've done EBITDA margins of 17.7%. So you've beaten the guidance significantly. So what's the new EBITDA guidance? And even on net profit, what would your guidance be? And again, I know we ask you this every time, but after a 100% jump in revenue, why not raise the revenue forecast? Why are you still holding on to that 35-40% kind of a revenue run rate?
Actually, in the current situation, basically this business, as you know, this is completely focused into enterprise and high-end government actually. 50% of business comes from government, 50% of business comes from high-end enterprise. All large customers primarily we focus upon. All the large customers depend on the production workload for us. As regards operating EBITDA, it was around 14.9% this year, while it was basically around 13.2% last year-on-year basis. So definitely EBITDA has slightly increased. But basically, my EBITDA guidance will be around 14% only. I'd like to keep it around that, because basically we are seeing the growth momentum, and basically we want to price our products very, very reasonably, so that basically people are able to take the value for money. Since basically all our customers are long-term customers, we have a very good repeat customer base. So we don't want to overcharge our customers. So we will the EBITDA guidance, which I will like to operating EBITDA guidance, I like to keep it at 14% only, ma'am. And as regards the PAT also, my guidance will be between 10 and 10.5% approximately. I like to maintain that as well.
Mr. Lodha, what about your order book position? Your order book has come down compared to last year, and if I'm correct, that might be because of the fact that you're executing orders quickly. But what about replenishing the order book? What the kind of pipeline you have currently, that has gone up, but how much of that is likely to translate into orders going forward? What's your order? What kind of order book growth are you envisaging for this year?
Yeah, so basically our kind of business really, I think this is the first time I'm talking to you maybe. So basically our kind of business cannot be just from the order book kind of thing, because our order book cycle is very short for us. Order basically gets executed between 8 to 12 weeks actually. So basically we are a funnel driven company, but if you really see the L1, where basically we are already we have won the order, but the purchase order is yet to come. So that is 100% sure kind of a situation. So basically if you add 464 crores and 229 crores, so that is somewhere around odd 600 plus crores actually. So that is kind of order book which we have. So in totality, the order book has not gone down. It's up only, and our funnel is also going up, as basically we are proactive sellers. As I have been telling, we are not reactive. That basically any tender is there, any RFQ is there, we just bid for it. We primarily basically define and devise our solutions around that. So basically it takes us around 3 months to 6 months to work on projects. So that takes basically the funnel closure time is also long. So that's basically this funnel actually gives me the confidence that I'll keep on growing at the 40% CAGR, which I have been telling you, and we have been performing quarter on quarter.
All right, Mr. Lodha, take that point. Thank you so much for joining us, sounding confident about the future growth prospects as well after a stellar performance in Q1. That's the word coming in from Netweb Technologies. The stock, though, has come off from the highs since the time we had that conversation. But we'll slip into a break. A reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access. Our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back. Still tuned into Trading Hour. Kabil reported their Q1 numbers. The company saw its revenue rise 14%, EBITDA surge 50% versus last year. Wires and cable segments saw a growth of 23%. Rajesh Jain, the CFO at the company, is joining in now to take a few questions. Mr. Jain, good morning. Thank you so much for joining in. Can you talk to us about what the outlook is for FY26 going forward in terms of volume growth? You had guided for 18% growth. Does that stick? And what was the volume growth in Q1 itself? And what is the demand looking like in Q2?
Morning, and it seems FY26 is on track, and we see a very positive development in terms of value and volume growth. Looking to the various vectors of infrastructure growth or our capacity expansion, we are confident to get this 18% volume growth for this year, FY26. Though in this quarter, like our volume growth was at 7%, which was like led by wire growth, and in cable, the growth was not as per our expectation because there were some spillover orders which will be executed in this quarter. So it seems we are on track in terms of our projections and execution.
Okay. 7% volume growth in Q1, 18% for the full year. So what about the decline in copper prices? We've seen a sudden drop, more than 20% recently in copper prices. How will that impact you going ahead? And even, on your margins, you've managed to expand your margins by 7.6%. You had last time spoken about 100 bips improvement in margins this year. Is that on track?
Yes. We will get the improvement of 100 bits in this year, though it will be like gradually quarter on quarter, it will keep growing. And see, copper volatility is part of our business, but this 20% was for US for some time only. Otherwise, copper is volatile on both sides. Like we have seen upward trend also during the month of May and half of the June, and now it is on like some softening to some extent. But this is it is part of our business.
Mr. Jain, because of this, do you see any bearings on your margins going forward? Because what is the kind of margin profile you are envisaging for the full year? Because you had mentioned earlier that you wanted to see hold on to that double-digit guidance around about 2 to 3 years down the line. Do you still stick to that?
Yes, we are on track. We are working towards margin improvement on all the fronts. So it is achievable.
Let's talk about the FMCG business. What about reaching that break-even level there? Do you think that will happen in Q2 itself? Because losses have contracted quite a bit in Q1.
Yeah, but Q2 is always a soft quarter if you see industry-wide, because since we are like almost 50% our revenue comes from fan, which is Q3 and Q4 item. So maybe not for Q2, but we are certainly sure for getting back even in this year at EBITDA level.
Okay, so some point in H2, you see FMEG breaking even, not in Q2. Got it. What about exports? I think 26% of your revenues comes in from exports. Now, with the whole tariff situation, how do you see exports playing out? Because I think you've spoken about how export cable margins are higher than the domestic margins. So if exports get hit, there could be an impact on your overall margins too, and there's guidance of improving.
There is a lot of uncertainty about the US exports, but the good part is since we are the largest exporter and our export is spread over many countries, so US is part of that strategy. We see a very good scope in coming future. So there may be some impact only on US, but overall when we see our cable strategy, our product strategy, export is still a very good sector and we are doing very good. Overall export to US is around 2.5 to 3% of our overall revenue. So, and still see things are not clear. So we are not sure how things will move. So let's wait and see how things will shape up in near future. But it will not have a very big impact on our business.
But did you see any impact of this in the current quarter, Mr. Jain? And if this uncertainty with regards to the US market, do you plan on offsetting that uncertainty by diverting your exports towards other growth markets? And what is the current export to domestic mix, if you could share some light on that?
So see, still export is like contributing, even if I consider only wire and cable, then it is contributing almost 30% in my revenue. And since we are exporting very huge quantity in Europe and Middle East also, so we have a good scope based on our cable capacity expansion and new product, new geography. So we are keeping a close watch on our export side, and we are quite positive that we'll do good.
Okay, all right. So what's happening with US tariffs also is a developing situation, but we'll come to you for more conversations, Mr. Jain. Thank you so much for joining in today with the update on the outlook going forward. With that, we'll slip into a break, but remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. the Big C and the Global Lens at 8:30 p.m.
Welcome back. The Nifty has seen a bit of a dip now towards the lows of the day. We moved below the 24,650 mark at one point. We've just seen a slight recovery from the lows, but still almost 100 points lower now on the index, below the 24,700 mark. And one sector that has taken it on the chin today is Pharma. And in particular, it is Sun Pharma that has taken a bit of a hit today. And that is on concerns that after Donald Trump's directive to 17 big pharma names to make drugs more affordable, the company's innovative portfolio may be targeted. Ekta is joining in with more details on this. Ekta.
Well, yes, pharma stocks are in focus today as the US President Donald Trump has sent letters to 17 major global pharmaceutical companies, including the likes of Eli Lilly, Pfizer, AstraZeneca and Novo Nordisk, strongly urging them to reduce US branded drug prices and align it with those charged in other regulated markets such as Europe. While there is no immediate impact on generics, analysts warn that the long-term addressable market for generic drugs could possibly shrink. This, coupled with already existing pricing pressures, could pressure the generic market in the US further and possibly even rejig plans, long-term plans you'd have to say, when it comes to, for example, in-licensing deals. For Sun Pharma, besides earnings, which we will just get to, the spotlight is also on its global innovative medicines portfolio, which is basically their specialty drugs portfolio, which includes branded drugs such as Ilumya, Sequoia, Lexelvi, Winlevi and Odzombo. This segment, which accounts for nearly 20% of the total revenue and grew nearly 17% year-on-year in the fourth quarter to $311 million, while the company has not heard from the US administration and its point that any move to cut the US branded drug prices could result in the company reducing their specialty drug prices. And when it comes to earnings, the company has also flagged that its effective tax rate will normalize to 25%, up from 16%. This has resulted in EPS downgrades, with some analysts cutting their FY 26 to 28 estimated core EPS estimates by anywhere between 8 to 13%. Adding to the uncertainty on pharma, while pharma is currently exempt from tariffs, the pharma imports into the US are being reviewed under Section 232, a national security provision typically used to evaluate whether certain imports pose a threat to US interests. Analysts believe it is a medium-term overhang, and any adverse finding under Section 232 could have major implications for Indian drug makers. India imported around $11 billion worth of pharmaceuticals to the US in FY 25, accounting for 35% of the total pharma exports and nearly 47% of all prescriptions filed or filled in the US in 2022.
Thank you very much for that. By the way, the market has moved southwards. It's down about 100 points, so it's taken a turn for the worse. Pharma continued to reels under pressure. Sun Pharma, Ekta was talking about it. But look at Dr. Reddy's. That too is down nearly about 4%. And now the cuts are getting deeper in some of the IT names. Infi, Wipro, both down nearly about 2%. But as we wrap up on the show, here out Sandeep Bhatia of Macquarie Capital and his call on the pharma stocks.
It raises multiple issues. One is the immediate issue of whether Sun Pharma and some other innovator drug companies will get notices like what the Swiss and the other multinational companies have received from the Trump administration. In the last quarterly conference call, my analyst says that Sun Pharma derives around 20% of its revenues from innovative drugs. sold in the US said that they had not received any such communication. But this is anyway, with the Trump administration, everything is work in progress. Everything can change. Even when things are moving in a certain direction, they can move suddenly in the other direction.